Hello and welcome to another update video about Natgas. Yeah, on the Natgas chart, the small rally here that started on Thursday last week, is still unfolding. I see this currently as an unfolding C wave within a larger wave 4 corrective rally. As I mentioned in the last few videos, as long as we only see a 3-wave rally or 3-wave correction, yeah, I assume that one more low should follow in wave 5 to the downside. The thing is, with these Natgas charts, on some charts, it is actually possible to count it like this, to say that the B wave bottomed here, okay? And then this is a 1-2 setup, and this is now a 3rd wave rally, yeah, all part of this C wave, which could then send us possibly quite high in this resistance area. The problem is here on the continuous contract, on the TradingView chart here, this is not possible because this swing low that was formed on Thursday is slightly lower than the one here from Sunday, the 25th, 26th of March. So it is not valid technically to say that this here could be a wave 1, this could be a wave 2, then this could be a 3rd wave rally, absolutely, and then 4-5 looks good, but it doesn't really align with Elliott wave rules. Now, then again, because of all these different charts, sometimes, you know, it's not exact science, right? That's the thing, but I just wanted to mention that depending on which chart you're looking at, on some you can count already a 1-2. Well, I can't do that here. I have to assume that this B wave bottomed, and that doesn't matter so much really, considering the bigger picture. Sometimes on the micro levels, it does matter. But then again, Natgas is not really an asset where you should analyze, let's say, the 15-minute charts with Elliott wave. It simply doesn't work. Okay, it's just too small to be reliable. You have lots of bot trading around these small time frames and also lots of different Natgas charts. So useless. Okay, but looking at the smaller time frame charts, like 4 hour, 1 hour, that works, you know, that at least gives us some patterns to track, some risk management levels, some invalidation points, and so on. At the moment, we can clearly see this is only a corrective rally, and I shared with you in previous updates that the actual resistance area is defined between $2.07 and $2.49. And then in addition to that, we've got this target area that is actually based on the internal wave structure, waves A and B, and the C wave rally here is between $2.10 and $2.50, and this is an ideal target zone, you could say, which is within that resistance area. All right, so that's what we're watching, and yeah, and overall there is currently no indication at all that a top has formed, so could still go a bit higher short term. I think earliest evidence that a top has formed in wave C, and it should ideally stretch to $2.11 at least, because this is the 100% extension of the A wave. But earliest evidence that a top of sorts has formed would be a break here below the last swing low at $1.90, well, $1.91. So if we get a sustained break below that, when we tested that trend line, right, break below that level, that confirmation level, that retest level, that could be an indication that the 5th wave to the downside has started to unfold. And then we can also, once we have a confirmation for a top in place, we can calculate or recalculate the targets for that 5th wave to the downside. At the moment, we just have these here, which can give you some orientation, but they are moving targets, and it really depends on where that 4th wave tops for us then to recalibrate, you know, or refine these targets. Then we can calculate them more precisely. But at the moment, they are between $1.16, $1.22, and $1.43. So no short-term weakness at the moment, could still push a little bit higher. The resistance area, however, hasn't really been reached yet. So we're only going to reach that, you know, maybe in the next couple of days or so, probably maybe tomorrow or today. So we are close, but nothing unusual happening here at the moment. And if I see a larger 5-wave pattern form to the upside, then I would have to reevaluate my assumption that we get one more low. I mean, looking at the big picture, we are very close to a long-term low in my opinion, but there is just no evidence at this stage that a low has formed, considering that this move up is only a 3-wave corrective rally. So it would take a really full set of 5 waves to suggest that a low is in. There is nothing here that is in any way bullish other than a green candle, and that could simply be part of that larger 3-wave corrective rally. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.